Hello traders, and welcome back to Explain the Charts. Today is October 19th, 2025, and we're taking an in-depth look at EURUSD, dissecting both the latest news and the story the charts are telling us. Let's start with the current events shaping the market sentiment. The US dollar has been showing signs of weakness, largely driven by comments from Fed Chair Jerome Powell hinting at another potential rate cut. Powell specifically cited downside risks to the U.S. labor market, which has pushed Treasury yields lower and dampened enthusiasm for the dollar. Adding to the dollar's woes are renewed U.S.-China trade tensions and growing concerns over regional U.S. banks, which are limiting its appeal as a safe haven asset for some investors. On the other side of the pair, the euro has found some stability. This is primarily due to easing political tensions in France, where the Prime Minister recently survived no-confidence votes, providing a bit of a tailwind for the common currency. However, the macroeconomic picture is complex, with some analysts pointing to a short-term neutral or bullish bias, while long-term forecasts for 2025 remain bearish, even suggesting a potential return to parity at 1.0000. Traders are now eagerly awaiting key inflation data from the U.S. this week, including CPI and PMI numbers, which could heavily influence the Fed's next move. Now, let's see how this news backdrop correlates with the price action on the charts. Looking at the daily chart, we can see the broader context of EURUSD's performance over the past year and a half. After peaking in late 2024 around the 1.12 mark, the pair entered a sharp and sustained downtrend, bottoming out near 1.01 in early 2025. This major sell-off aligns with the long-term bearish fundamental outlook some analysts are forecasting. Following that low, we saw a significant recovery rally that lasted until about mid-2025, where the price peaked just above 1.18. Since that peak in September, the momentum has shifted, and we've been in a clear downtrend for the last month and a half. This recent price action has established a very clear resistance zone around the 1.1800 to 1.1900 area. Conversely, the sell-off in early October established a critical support level. We can see a double bottom formation that occurred on October 9th and was tested again shortly after, right around the 1.1544 price level. This 1.1544 level is now a major floor for the price in the short to medium term. Let's zoom in on this recent downtrend that began in September. As you can see, after hitting a high of 1.1918 on September 17th, sellers took firm control. The price action consists of strong bearish candles with very weak bullish pullbacks, indicating significant selling pressure. This move culminated in the sharp drop to our key support at 1.1544. The price is currently trading around 1.1650, which is a critical pivot point we need to watch closely. This level is significant as it represents a battleground between the recent bearish momentum and the buyers who stepped in at the 1.1544 support. Now let's switch to the 1-hour chart to get a better view of the recent price action. Here we can see the rebound from the October 9th low in more detail. The bounce was quite strong, taking the price from 1.1544 all the way up to a recent high of 1.1728 on October 17th. This aligns perfectly with news reports of a pullback from weekly tops. However, since hitting that high, sellers have stepped back in, pushing the price back down. We can see a series of lower highs and lower lows forming over the last 48 hours. This indicates that the short-term bullish momentum from the bounce is waning. The price is now consolidating right around that key 1.1650 level, which news reports also identified as a minor resistance area. Drilling down to the 15-minute chart, we can analyze the very immediate price action from the last few trading days. We can clearly see the struggle happening right now. Notice the choppy, sideways movement between roughly 1.1645 and 1.1700 over the past day. This tight range shows indecision in the market as both buyers and sellers fight for control at this crucial juncture. The failure to hold above 1.1700 is a bearish sign in the immediate short term. However, the buyers are still defending the 1.1640 to 1.1650 area, preventing a steeper decline for now. A decisive break out of this narrow range on the 15-minute chart could signal the next directional move for the next few sessions. Okay, let's pull back to the daily chart to summarize and look ahead. To recap, the key price levels are absolutely critical right now. Our major support is the double bottom at 1.1544. Our immediate resistance is the 1.1685 to 1.1720 zone, which has capped the recent rally. Above that, we have further resistance at 1.1765 and the major psychological and structural level at 1.1800. The current price is sitting right on the pivot at 1.1650. So, what are the potential scenarios? Let's start with the bullish case. If we see weak US CPI data reinforcing dovish Fed expectations, we could see a break and hold above 1.1720. A sustained move above this level would signal that the bulls have regained control in the short term, targeting 1.1765 next. I would place the likelihood of this scenario at around 40%, given the prevailing longer-term bearish trend. Now for the bearish case, which seems more probable given the broader trend. If the price fails to break above 1.1700 and instead breaks down below 1.1600, it would be a strong signal that the recent bounce is over. This would be reinforced by strong US inflation data or escalating trade tensions, which would strengthen the dollar. A break below 1.1600 would put the key support at 1.1544 back in focus. If that support level breaks, we could see a much larger move down towards 1.1500 and even 1.1380. I give this bearish scenario a 60% probability, as it aligns with the dominant daily trend. The main thing to watch this week is the US CPI and PMI data releases, as they will be a major catalyst. Thank you for joining me on Explain the Charts for this in-depth analysis of EURUSD. Please remember, this is for informational and educational purposes only and is not financial advice. Always conduct your own research and due diligence before making any investment decisions. Trade safe, and we'll see you in the next video.